Kevin, welcome back to F.A.C.E. I don't know how long it's been, but I will say it's been too long when I forgot your name and had to ask you again. How are you? Let me get you to unmute. Asking you to unmute, and a perfect day to talk to a professional like you.
Grandpa, how are you?
Hey, not too,
Has
not
it
too
been that
bad,
long?
son.
What, over, I don't know, a year and a half? You always check in with me every once in a while, and I appreciate it.
Yeah, Kevin. So great to be with you on the Fed Day. You're going to be doing a little screen sharing today, or are we
Mm-hmm.
just going to be talking markets and
We
I can
can
move around?
share the screen, yeah.
Okay. So, I went to your site just to refresh my memory, and I know a big part of your work, and probably be interesting to talk about, is the CFTC reports and
Mm-hmm.
commitment of traders, and if you're gleaning anything from them going into the Fed
Mm-hmm.
that would give you some biases after this event.
Yeah, big time.
Yeah.
Can you see my screen now?
No, it's at the bottom. It's
Oh,
that
there we
green
go.
button.
And boom.
Here we go.
Now you see my
Okay.
screen?
Got it. Got it.
All right. Yeah, there's been a lot of information that we've been getting from the CFTC reports, like incredible amounts. So, it pretty much started at the beginning of 2022. All right. When
Yeah.
we had the invasion, the Russian invasion into the Ukraine.
Right.
And some really, really interesting things happened during that time. Now, listen, I'm not a conspiracy guy, but I just point out facts. All right. I just point out
Oh,
facts. I look
right.
at what's happening. I look at the positions that the banks are holding. And I look at, what the media is saying out there. And I put everything together and I just tell the story that it tells. And I will tell you that something really interesting happened with this whole lead up here in gold price. When you look at
Okay.
the CFTC data, you can clearly see that the big banks were piling into massive long positions on gold. All right.
They
And
knew
this
there'd
is
be an invasion.
this is pre-invasion,
Oh,
right? Yeah.
right.
So the interesting thing is, as you know, you're well aware of that, you read any type of book and they tell you that whenever there's a time of war, you buy gold. That's just the thing, right? Everybody knows that. So the funny thing is that, when I look at my data, which I collect every single week, and I compare, the previous week's data with this week's data, and I have data going back to, into the 80s and 70s on some pairs. So I collect the data and I color code them so I can see when they're aggressive with their positions and when they're not aggressive with their positions. And what I
Yeah.
noticed was that the banks leading up until right here, let me show you. Okay. So February 24 was when the whole thing broke out. Okay.
Right.
And as you can tell, leading up to it, right? We went from 275, 279, 313, and then the highest amount of gold positions was February 22nd. They reported, okay, one of the highest in a long time. The previous time that we had 360 was back in November 16.
Yeah, I
So
see that.
leading up to this situation, the banks were piling into long positions, all right?
Yeah.
And then after the news came out, they put in a few more long positions. And what that did was it helped fuel a move up on the charts because, February 24th is in this area here. So you see the large spike up here,
Right.
Dale? See that
Yeah.
big spike? So
Yeah.
that was all the retail traders reading the news and saying, oh my gosh, we're going to war. Let me pile into some gold positions. And so there was a big rally up. It came right back down. And then we saw this big spike up. Now, up at these highs, we had people like Goldman Sachs coming up saying, oh, yeah, we see gold going up to
2,400.
2,500.
Yeah. Yeah.
Yeah, you remember that?
Yeah, I
So
do.
everybody was thinking, okay, so we got a war. Goldman Sachs saying it's going to 2,500. Guess what happened up at these highs?
Banks are big sellers.
Well, yeah, because they accumulated such long
Yeah.
positions, such a
Right.
large long position. It's like this, Dale. After I've been studying the CFTC reports and the data for so many years, what I've been able to determine is that, you know, when they get to a certain amount of positions, like right here on my spreadsheet here, I have marked up what's the largest amount of long positions they've ever held, because I think that number would be a nice number to know, and it was
Yeah.
408,000. So I asked myself, what happens every time they get to those positions up in the 380s, 90s, 400,000? What typically happens? You know what typically happens? They take profits on those positions.
Right.
So it's almost like they're working within a certain amount of money or positions that they're going to be purchasing. And when they reach those maximums, you can't keep purchasing, so you're forced to sell. And I just think it's very, very interesting how they were already preparing by buying gold leading up into this incident that happened February 24th. And then when the banks needed retail traders to come in and take those long positions off of them, you have people like Goldman Sachs coming out saying, guess what? Gold's going to go to 2,500. And so after they did that, everybody and their grandma come in and they started buying those gold contracts. And this is what happened. They took it up to what, 2060? And they offloaded, the banks offloaded all those long positions that they had. And then boom, it's been all downhill since then.
So are the banks equivalent to commercials?
No, they are part of it, but they're not. And that's the
Okay.
big fallacy with looking at CFTC data. When you buy those books that are out there, and there's a few people out there that profess to have all the answers when it comes to CFTC reports and the data. And it's unfortunate because the thing that they're telling traders is that you should be focused on the commercials and not the non-commercials. And I can tell you from my experience, and listen, I haven't been doing this for 40 or 50 or 20 years,
How
but
many?
just over 10 years now.
Okay.
Just over 10 years.
That's
This
pretty
is
good
this has been
history.
my life. This has taken over my
Anything you
life.
do for a decade is an important chapter.
Yeah,
So,
I've calculated about close to 40,000 hours I've put into this type of work.
okay.
And what I've been able to determine is that if you follow the commercial side, you're not going to do very well. You're not going to see the full picture of what's really taking place on the charts. If you
Yeah, I
follow the
was always
non-commercial,
early. You were because commercial. I always rationalize it that commercials have deeper pockets than retail. So when they had a huge position, um, you know, uh, they could afford to be early, and we can't. So that's what I got from following the commercials. I was usually early.
yeah, that's a good way of looking at it. If you want to time the markets the way that you want to time the markets, meaning you want to get in at the highs, get in, or if you're going to go long, you get in near the lows. If you want to time the markets and you don't want big drawdowns on your account, I mean, the big banks, they don't care. This is toy money for them. You can see it all the time when you track the CFTC data. You can see when
Yeah.
they get into positions and how they don't care if those positions go into the red. And it could be for months that those positions go into the red, because sometimes they'll just put in positions into the market just to push the market in a certain direction to get retail traders to do the exact opposite.
Yeah, it's the old story of pros driving up a market so they could distribute and take down a market so they can accumulate.
Mm-hmm.
So what
Mm-hmm.
they doing here, Kevin?
Well, my friend, what they're doing here is I show you. All right. So if you take a look at the positions here, this is the latest data from September 13, and I'll point you in this direction. So here are long positions. We went from 310 to 225,000. Okay. So that's clearly they're removing their long positions. In other words, profit taking on long positions, right?
Right.
So if you look at short positions, look at from April 26, we went from 92,000, and I'll point out these dates here. The end of July. You see how many short positions they went from 92 to 148? That's drastic. That's a big move, okay? So
And we
you
did
ask
get a
yourself,
rally that didn't hold, right? On those numbers in gold. It rallied, gold rallied with the market.
yeah, let me show you what's going to happen. This is pretty interesting stuff. Late July, Dale, and you're exactly right. Take a look at this, okay? Late July, what happened late July?
Yeah,
We have this here.
Yeah.
You see this here?
Yeah.
All those short positions that I just showed you on the CFTC data that are under the non-commercial, not commercial, non-commercial. Why is that so important? Because if you take a look at price overall, you'll see that price has been ranging, okay, all throughout here. This has been a massive range. Why is price ranging? Well, there's a lot of things that we probably don't have time to get into now, but the bottom line is that price was ranging because there was a massive area of buying here that the banks had, okay? And so in order for price to go lower on the charts, they have to remove these buying areas that they themselves created. And so what tends to happen is price will come down. Oops, let me just fix that. They'll tend to come down into the buying area, rally price up, down into the buying area, down into the buying area, until there's no buying happening here, and they remove it. But as this formation, this ranging formation was taking place, I'll point out something really, really important here. You see this trend line here, Dale?
Yeah.
Okay. So trend lines are used by the institutions. How are they used? Well, if you go into any bookstore and you look at, you know, how trend lines are supposed to be used, there's a handful of different ways that people are to interpret trend lines. But one of the ways is that, you know, the more tests of a trend line, the more stronger that trend line will become. And then when it tests, you buy. Yes, it happens. It does work. And, you know, if you know what you're doing, you can make money using that. But the thing here is, Dale, is that if you take a look at this trend line and you see how it tested here, okay, this was an important trend line that a lot of people were watching, a lot of retail traders, as well as the banking institutions. So when price came right here, remember what was just happening late July? The massive amount of short positions that the banks were filling. The reason they were allowed to fill in so many shorts is because there was somebody else that was buying from them. Right, Dale?
Okay. Yeah, it takes
If you're selling, you got to have a buyer. If the banks are selling, who do you think they want to buy? It's guys like you and I, all the retail people. So that's why they were able to fill in so many of those short positions. And so we located this area as a significant area of selling that the banks wanted to do, that the non-commercials wanted to do. And so what happened was when that price was testing that ascending trend line, a lot of retail traders were buying, the banks were selling to them. It caused price to drop. And as you can see, here is our area of buying, okay, these big green lines. This was the area that they've been holding for so long. We saw price come dip deep, so deep down into this buying area. It retraced up. And where did it retrace to? Right there. Why do you think they retraced the price back up there? Because that's where the banks were selling. So they weren't able to fill in all the short positions that they wanted to initially with this first drop. So they retrace price back up to that area, and then they fill in their orders. And guess what happened recently? You see that line being removed?
Yeah.
That's a significant move. That's telling me the banks are showing us their cards, and their cards are reading they're not interested in holding gold price anymore. All they're interested in was taking profits on their long positions, filling in a boatload of short positions, and preparing for this to drop.
And still, they're still looking for more downside. There's no.
There's no doubt in my mind. There's no doubt in my mind. There's no doubt in my mind that they're looking to push this down further. I mean, when we look at the higher time frame charts, like I look at the 6-month chart, okay, and I can see that we have a move up, a down, consolidation here, and a move up. Okay, that surpassed the previous high. We have a trend line here. Now, this is an uptrend, as we all know, okay? Ascending trend line, the previous highs were surpassed. So you don't typically want to go against the trend. You know that, right? All your experience has taught you that, Dale. But there is momentum to the downside here. You know, we look at this last candle here, and it's a basing candle. And we see this big, long candle to the downside. That's a momentum candle. When we have basing followed by a momentum candle to the downside, it typically means price is going to continue going downwards. But the question is, it's going to continue going downwards, but what is it going to come up until? And the thing is, we don't have an institutional buying area located on this chart. All we have is this trend line to the upside. All right. Okay. All we have are these trend lines to the upside. So I have a target in about the 1500 area,
Yeah.
because I figure once price get down here, I wouldn't want to even consider being short. Up at these early stages, I just got out of some short positions because of price stalling here near the lows, and I'm seeing a lot of signals to tell me that short-term momentum could potentially be upwards. So I figured I'll get out of my short positions and I'll just wait until the coast is clear and momentum starts to pick up again to the upside, and then re-engage. But once price gets down towards the 1500 area, I'll be looking to get into a long position on gold for a longer period of time.
Long-term
Long-term.
buys down there.
Mm-hmm. Yeah.
Okay, silver's a little different story.
Silver, I don't really look at silver too much. The chart isn't as nice and clean as gold. We do have a really big institutional buying zone that just came into play. So longer term, I don't see any reason
1850.
why it can't go higher.
Yeah, okay. So is the institutional buy zone in that shaded area around
Yeah,
1850?
the green area on the 6-month chart.
Oh, okay, on the 6. So that's anywhere from 12 to
Yeah, it's a
16.
big area. So the
Okay.
fact that a 6-month area came into play, you know, you got to consider every candle 6 months. So we could have basing right here, which is
Yeah.
what it looks like it's creating. So we can have until the rest of the year where we're just staying in a range. But once I see signs that there's a breakout from this basing area to the upside, then I'll be looking on the lower time frame charts for that momentum to continue to the upside.
You know, the white stuff goes first.
The white stuff goes first.
Yeah, silver's white.
Oh, yeah, that's
uranium.
yeah, I
is
wouldn't
white.
be surprised to see that
No,
happen.
that's
Yeah.
yellow cake. Platinum's white. So the white stuff goes before the yellow.
That's interesting. I never heard that. That's
Okay,
good to know.
so really some nice looks. Any other market that you want to cover with your dad? It's really great to have you back, Kevin.
Yeah, well, thank you
It's
again
not
for having me.
get you right back into the rotation. So, you know, sometimes I forget to do that, and then you fall through the cracks. So I'm glad I
That's
reached
okay.
out
You're a busy
quite
guy.
often.
You've been interviewing a lot and doing a lot, so I appreciate you having me
Okay.
back on.
Well, you're getting some agreement from the audience. Someone's talking gold 1420.
Yeah, I mean, it's all pointing at the direction. You know, when institutional buying areas get taken out and the institutions are filling in massive amount of short positions, that's all I care about. And one of the other things that I like to look at is the news. I love to look at the news because, you know, just late last year, I made the decision to start trading the stock market. I used to trade it back in the day. Then I just focused on the currency market, gold and oil. But I saw so many opportunities over the last 2 years, Dale, with you know, pharmaceutical companies, and you know, the market just blew up. And I looked and I said, why are you not taking, you know, advantage of these opportunities? So I started doing you know, some work on the markets. And when I started using Yahoo Finance to dig into who was owning these corporations, and you know, because I'm trying to do some research, I'm trying to figure out
So
why
yeah, you're
companies
looking underneath. So you're going to be looking for insider buying and things like that.
insider buying, and I want to know, you know, why price is doing what it's doing. That this is the one thing I always try to focus on, is why is price doing what it's doing. And when I start digging into who owns all these the majority of these big corporations, I saw that, you know, two major companies own them, BlackRock and Vanguard. I'm thinking to myself, well, that's kind of crazy. I mean, these guys own everybody. You know, when you own the banks and you own the pharmaceutical companies and you own the media companies, it's like, wait a minute. Okay. So if I own the banks, and the banks are the ones that are moving the markets, and the banks are the ones that were getting into gold near the highs, and I also own all the major media companies, then that means I can spin the headlines whatever way I want. And I got to thinking and I was like, huh, are they spinning the headlines in a certain way so that they can lure retail traders into doing the opposite of what they actually want them to do?
Oh, they no, that would be mean.
Ooh, wouldn't that be? And
Yeah.
so I've been tracking the
Someone's
media.
saying, and guess who owns BlackRock and Vanguard?
Guess who owns them? Well, I know
Yeah.
Vanguard owns BlackRock, And
who
the
owns
owners of
Vanguard?
Vanguard is very difficult to pinpoint, but I mean, you can just do
It's got to
look
be the
back through history.
Rothschilds, right?
Yeah, it seems like
The
that. The only people that
Bilderbergs.
Rothschilds,
Jezrin said the mafia.
the Morgans,
Yeah.
all those characters that run the
Nancy
Federal Reserve.
Pelosi, someone's saying. The
No, not Nancy
Jerome
Pelosi.
Powell.
No, they're just little puppets. Those guys. They don't have
Yeah.
family money like these other guys.
So, are you trading individual issues now
excuse me, sorry.
in stocks? In stocks? Are
Yeah,
you
I
trading
trade the
things like?
stock market. So I'm looking at the S&P, right? If in
Yeah.
order to buy stocks, I got to know that the market's going to rally.
Right.
And I haven't seen any signs that there's going to be a market rally. In fact, everything is pointing in the direction that, longer term, we're going to be seeing a drop. So
Okay.
again, when I look at what the news is saying and I look at what the positions on the banks, I can pull that up as well. Take a look here, S&P. Okay, this is the S&P 500. So if you take a look at long positions, you see how all these numbers here, longs, are cooled off. Or I shouldn't say cooled off. They're blue, I should say. I set up this spreadsheet so that when the columns are blue, that means the positions are cooled off, which means the banks are not really focused on those positions.
Okay.
When they turn red, that means the positions are aggressive. That means the banks are focused on that direction. So when I look at longs and I see the coloration of the cells being blue, I know the banks don't really care about, long positions in the markets right now. I look at the coloration of the cells under short and I see red. Not only red, but it's becoming darker red, which means
Yeah.
they're becoming more aggressive with their short positions. So
Yeah.
all the indications is that price is dropping, okay? And they're preparing this for a long time. And they don't change their direction on a whim. They take, months, sometimes
Months.
years to
Yeah.
accumulate
Takes
a
time to
position.
turn a battleship around.
Yeah, exactly. Right. So,
Yeah.
when they spend a long time to accumulate something, they're not going to change their mind in a heartbeat. So everything is pointing in the direction that the market is going to continue lower. And when we look at the what's happening on the charts, technically, we see that back in early 2022, and again, these zones were created just around the war. Okay,
Yeah.
so big drop. We saw this happen right down here. It rallied
Yeah.
back up right towards the selling area,
Right.
and we're seeing it come back down again.
Yeah.
The only thing is, I would not say it's going to drop immediately, okay? Because when we are taking a look at the trends that the banks create, and yes, the banks do create trends, we have a trend line coming down here, but we don't have a downward trend on the weekly chart. Why don't we have a downward trend? Because institutional selling areas that would typically be used to hold price and propel price to the downside, they were removed. So yes, there's a trend line, a descending trend line, but a supply zone can't be removed in order to keep a downward trend. So right now, price is entering into ranging like
Okay.
this. So
Yeah.
what I'm really focused on, Dale, is looking at the daily chart and looking at this ranging that we're just heading into. And
Yeah.
once I see signs that a downward trend is going to be formed to break out of this ranging, then I'm going to be looking in, taking advantage of a move to
Yeah.
the downside.
And it looks like your chart, and we'll wrap it with this on the upper left-hand side.
Mhm.
Your monthly has some shaded areas and a trend line around 3,000, which is a lot of people's targets for this bear market,
Mhm.
3,000 or the pre-COVID high. So I
Mhm.
tell you what, great insight into what's happening in a couple of markets and valuable information. Kevin, why don't you show your website so people know how to find you? And you could find them on Twitter at White Oak FX. That's correct, right, buddy?
Yeah, it's whiteoakfx.com. You can find out what we do, what we offer, the analysis we offer, and all that stuff.
Are you Sherlock?
Sherlock is the system that we created, how to read the
Pretty
markets
cool.
and so forth. Yeah.
Yeah, I like it.
Yeah. Thank you.
So Kevin, great to reconnect with you, and
Yeah. Thanks so much.
and really appreciate you coming here and sharing that hard work. The takeaway from the interview was the amount of hours that you've spent in the last 10 years developing your insights with following the money.
Yeah.
And, that's hard work. I say, trading is hard work, and you have to live through adversity. And if that scares you, do something else. Well,
Exactly. Yeah.
you show you're not afraid of the work. So
Well
we
said. Yeah.
appreciate
Thank
it.
you.
I'm
Thank you
rooting
for having
for
me.
you. I'm rooting for you, my trading warrior brother.
Thank you, Grandpa. I appreciate it.
All right. Well, okay, son. And great having you, Kevin. Thank you very much. And everyone, there you go. White Oak FX, find Kevin, follow him, and check out his website and learn to see what's happening underneath the surface. That's where all the market tells are.
Thank you, sir.
Thank you,
Have a
Kevin.
great day.
All right, so that's a wrap, everyone. You could join the team in 15, 17 minutes for the morning edge. Good luck with the Fed today. Remember, you don't have to do anything, and that the markets will be here again tomorrow. Make sure your equity is. And don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. See you guys tomorrow. You're welcome, everyone. Thanks again, Kevin.
Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.